Welcome, folks. First, as always, a quick look at our local real estate market here in the beautiful Blue Ridge Mountains of Northeast Georgia and Western North Carolina. Union County, Georgia. There are currently 256 homes for sale. 366 homes have sold thus far this year, compared to 399 last year. Average days on market, that's the length of time it's taking to get one of those homes sold, is 87 compared to 73 days last year. The average sold price of a home in Union County, Georgia is just under $449,000 compared to just over $444,000, fairly close, last year. The median sold price in Union County, Georgia is currently $399,500 compared to $399,900 last year. Fairly consistent market in Union County, other than the number of homes sold is significantly down. Towns County, Georgia, there are currently 174 homes for sale in Towns County, Georgia. 194 homes have sold thus far this year compared to 203 homes last year. The average days on market in Towns County is 91 days compared to 72 days last year. The average sold price is just over $449,000. Yes, the same. Well, actually, in Union County, it was just under $449,000. In Towns County, it's just over $449,000. Fairly consistent market. Now, that in Towns County, $449 compared to just under $498,000 last year. The median sold price in Towns County is $380,750 compared to $405,000 last year. Now crossing the state line over into North Carolina. Clay County, North Carolina. There are currently 116 homes for sale in Clay County. 146 homes have sold thus far this year compared to 144 last year. Average days on market's 114 days compared to 75 days last year. The average sold price in Clay County, North Carolina is just under $473,000 compared to just under $436,000 last year. The median sold price is $403,500 compared to $353,000 last year. So, in quick summary, Union County, Georgia, we're talking Blairsville. Home sales are down by 33 home sales. That's a big swing. If you're in real estate, that 33 divided by 2 of buyer's agent and sales agents, that's a lot of paychecks that aren't out there this year. The average days on market is up by 14 days. The average sold price is up by around $5,000. So fairly close to last year, other than the number of home sales is significantly down. Now, Towns County, we're talking Hiawassee and Young Harris, Georgia. Home sales are down by just 9 home sales. Not bad. Average days on market is up by 19 days. So it's taking, of the homes that have sold thus far this year, it's taking about 19 days longer than a year ago. The average sold price in Towns County, Georgia is down by around $49,000. That's a significant dip. Over in Clay County, North Carolina, Hayesville, Brasstown, and Warren, North Carolina, home sales are up by a whopping 2 home sales. So fairly strong market based on a comparison to last year. The average days on market is up 39 days, so it's taking a little over a month longer to get one of those homes sold. And the average sold price in Clay County, North Carolina is up around $37,000. So that's a quick look at the statistics for our local area. And again, every week when I give these stats, it's based on reported sales to the local Board of Realtors, which is the Northeast Georgia Board of Realtors. To me, they're the local board. Their stats are, I think, a little more comprehensive for our immediate area. There are other MLSs that cover our area. Occasionally, you'll see the Georgia MLS. People sometimes list on that one alone. Sometimes folks, and that's statewide in the state of Georgia, actually. I think spills over a little into North Carolina. You also have the Mountain and Lakes Board based over in Cherokee County, Murphy. They spill over into our area, but they're principally based over there. We also have, I think it's called the First MLS out of the Atlanta area. You don't see that hardly at all up here, but you do see the Georgia MLS and the Mountain and Lakes MLS. But again, our stats are based on the Northeast Georgia Board of Realtors because I think that is the most comprehensive for our area. Now, shifting gears, today's topic. Today we're going to be looking at mortgage rates and President Trump's floating of the 50-year mortgage rate. I've enjoyed what I like about President Trump is he is always looking for solutions. You may not like him, you may not agree with him on his solutions or his policies, but I will give him credit. He is solution oriented. And today we're going to be looking at his floating of the 50-year mortgage rate and the history of mortgage rates in our country. First, we're starting with an Inman News. If you've listened to our show before, you know I like Inman News. I think they do a good job covering the real estate and mortgage industry. I do think there's a political bias to a lot of their writings, but overall, stats are stats. This article came out November 10th. It's entitled Trump's 50-year mortgage is a big nothing burger for home buyers. A proposal floated by Trump administration over the weekend to address homebuyer affordability by allowing mortgage giants Fannie Mae and Freddie Mac to back 50-year mortgages has been met with widespread disdain by mortgage and financial planning experts who are panning the idea as a bad deal for borrowers. Not all of them. Not all of them. That's this particular author's take on that. The article goes on, President Trump teased the idea Saturday in a Truth Social meme, which was quickly confirmed by Federal Housing Finance Agency director, who said Fannie and Freddie are indeed working on 50-year mortgage, a complete game changer, quote unquote. Spreading out buyers' payments over 50 years instead of 30, the option most home buyers choose today, would provide a slightly lower monthly payment, but stick borrowers with a higher interest rate, leave them with a much smaller ownership stake in their home after making 10 years of payments, critics noted. There might be an argument for such a product if borrowers were able to get the same rate on a 50-year loan as a 30-year loan, some of the experts argued. The idea behind the 15 and 30-year mortgage is that eventually you own the home you live in, whereas the 50-year mortgage abandons this pretense altogether and fully embraces the idea of housing as a speculative asset, said one of the naysayers. That's me saying one of the naysayers, not the article. They have a breakdown here. Here we go. Using actual rates of November 7th for the 15-year and 30-year mortgages and an estimate rate for currently non-existent 50-year mortgage, a home buyer taking out a $341,440 mortgage after putting 20% down to purchase a median-priced home would pay. Okay, this is a 15-year mortgage. On a 15-year mortgage, it'd be $2,812 a month for a 15-year mortgage at 5.62% interest and have retired $194,669 in principal after 10 years. Now, a 30-year mortgage. Your payment would be $2,091 a month for a 30-year mortgage at 6.2% interest, which would pay off $54,192 in principal after 10 years. When we get back from these commercial messages, we'll see the details on the 50-year mortgage. As always, so appreciate y'all tuning in. Welcome back, folks. Today we are looking at mortgage rates and Trump's floating of the 50-year mortgage. We had discussed on a 15-year mortgage, the payment would be a little over $2,800. At the end of 10 years, you would have just under $195,000 in principal. On a 30-year, the payment would be a little over $2,000, and after 10 years, you would have principal of a little over $54,000. Now, 50-year mortgage. Your payment would be $2,002 a month for a 50-year mortgage at 6.8%, which would pay off $11,550 in principal in the first 10 years. And that is why a lot of naysayers are being negative. It's funny, I was talking with someone I really respect locally in real estate, Michael Anderson, this morning, and made a couple good points, I thought, one of which was that, if that's your only means by which to get into a home, you at least are getting your family into a home. You are getting them out of an apartment complex or a rental somewhere. You are getting them into a home that is theirs. And there is an emotional and a security. There's a feeling of security when it is your own, raising a family in your own home. Additionally, you're buying, and this was, I thought, the stronger economic reason, and that is you're buying a home at today's dollars. You are locking in a home at today's dollars. If you would allow me to go back 50 years ago and lock in a home at that price, wow, what a financial gain. Look at what homes have done just over the last 10 years. So, yes, I get that the equity isn't going to build up as fast, but you are buying a home for your family at today's dollars. The outgoing NAR president, I thought, had made a good point. He, in a article that came out on November 11th also, Kevin Sears is the outgoing president of the National Association of Realtors, and in this article they asked him a lot of questions, and one of them was regarding this, and it was, Trump tweeted this weekend about a 50-year mortgage. Do you have any thoughts on the idea of creating a 50-year mortgage? He states, on behalf of the National Association of Realtors, I don't. As a practitioner, I'd say it's a Band-Aid on the wound. What we need is more inventory. More inventory would make housing more affordable. Lower interest rates will make housing more affordable. But if this is a tool in the toolbox, fine. But it's not going to be the end-all, be-all. It's not going to solve the problem. Supply and demand. Supply and demand. Although inventory is slowly increasing up here in the mountains, we still have significantly less inventory than we've had in many, many years up here. And I would agree with the outgoing NAR president. I do think it's good. I personally would support a 50 years simply because I think it would afford the ability for some folks that couldn't start home ownership in this country. And I know, you're a realtor. Yeah, I am a realtor, but the truth is, at the end of the day, you got to do what's best for your country and your fellow citizens. And I'm a proponent of home ownership. I think there's self-pride. You look at an apartment complex, you look at rentals, and then you look at homes. People, there's pride. It's the same as owning a car. There's pride in it. You wash it, you wax it, you take care of it. Hopefully, be a good steward of that which the Lord has given you. All right. Now, let's take more of a historical look at mortgage rates. Historical mortgage rates, 1971 to 2025. If you're looking to buy or refinance a home, the interest rate your lender charges will determine how much you'll pay toward your mortgage each month. Mortgage rates constantly fluctuate, and where they were yesterday has little bearing on where they are today. Knowing the history of mortgage rate, interest rates, and the cycles they usually follow can give you a better perspective on where the market is today and what you'll have to pay to buy a home. This, I thought, was a pretty good article. The 30-year fixed-rate mortgage is the most popular home loan in the U.S. Freddie Mac began tracking weekly interest rates on the 30-year fixed rate back in April of 1971. The year 1981, 10 years later, saw the highest annual average interest rate, which peaked at 16.64%. The lowest rate was 2.96% in 2021. Yes, just a few years ago. The average weekly rate in 2025, and this is articles back from May, uh, is up. You'll see that while 2025 interest rates are higher than in recent years, they're still lower than they were for almost all of the 1970s, 80s, and 90s. The article goes on, and I like the historical approach. Historical mortgage rates by decades. Now that you've seen the raw data, and the article goes into detail every year since 1971. In the 1970s, the lowest rate was 7.38%, and that was in 1972, a year after they started keeping interest rates. So think about that. The lowest rate in the 70s was 7.38%. The highest rate in 1979 was 11.2%. Rates crept higher throughout the 1970s. They briefly dipped into the middle to high 8 range before peaking in 1979. This was during the period of the high inflation that continued into the next decade. The Federal Reserve took a more active role in regulating money supply by increasing the target for the federal funds rate to address an inflation crisis, the result of food supply shocks and multiple oil crises during the 1970s. You remember back to the crazy high inflation rates during the Carter administration. Remember his malaise speech in 1979. Now, going from the 70s, where the rates were a low of 7.38, a high of 11.2, you go to the 1980s. The lowest rate in the 80s was found in 1986, and it was 10.19. 10.19. The highest rate, this is the highest rate recorded on average, was 16.64%. 16.64%. That was in 81. That was, closer to the 70s as we were coming out of that massive inflation. The 80s started with a bit of hangover from the 1970s. In 1979, another oil supply crisis occurred as the Iranian Revolution led to strikes on oil fields, resulting in a decline in production of about 4.8 million barrels of oil a day. During this time, the price of a barrel rose from $13 to $34 a barrel. In response, regulations were loosened to allow more drilling in the U.S., but those moves took time. Already fighting the rampant inflation of the 1970s, the added supply shocks in the 1980s didn't help, and the Fed was continually pushing rates higher. This had an effect of moving rates up across lending options, including mortgage rates. Quickly to the 1990s, the lowest rate in the 1990s was 6.94%. That was in 1998. The highest was 10.13. That was in 1990. The United States achieved a level of economic prosperity in the 1990s not seen in the previous 2 decades. The U.S. economy was successful enough during the 1990s that other governments studied it to see what they could learn from our example. A report from the Australian government, which attributes much of the economic growth of the period to the U.S. being at the center of the internet revolution and benefiting from associated gains in productivity. So, capitalism. They attributed this to the economic growth of the period. Growth, capitalism. Yeah, you get an idea where I stand. The 2000s, the lowest rate was in 2009, a little over 5%, 5.04%. The highest rate in the 2000s was 8.05%. Then into the 2010s, the lowest rate was 3.38%. 4.65 in 2016. Lowest rate was in 2010, 4.69. Then into the 2020s, the lowest rate was 2.96 in 2021. 2.96 in 2021. The highest was 2023 of 6.81%. Folks, they go up, they go down. Where we're at right now, we just had that most recent cut. So rates, they go up, they go down. I can't say that. I guess to some that are very young and they see the rates now, they go, oh my gosh, they're double. But not from a historical standpoint. They're still very amenable. My name's Rick Andrews. I so appreciate y'all tuning in each week. If you're looking to buy or sell, I hope you'll reach out. Thanks for listening.